What's up, everybody? Welcome back to the Next Win podcast with your host, Aunt Ma, co-host Justin Vaseur, and special guest, our lender friend, William Wynn.
Hi.
We have a very special episode today because while we have a lender here, I want to ask the questions that everybody has been thinking about for the last year. And that is, when should you refinance?
Ooh.
Right? Everyone's been buying a home in the last year when rates have been up. And they're thinking, they're going to refi in about a year or two.
Yep.
Right? That's everybody's goal who's a new homeowner. So I guess first off, William, what is refinance? What does that mean?
So refinance is basically you're just refinancing your original loan for either another 30 years or another 20 to 15 years, depending on your situation, to lower your rate, to eventually save more money, and to lower your monthly payment, basically.
Okay. So it's getting a new loan
without the hassle of buying the house, you just refinancing that loan to get a better rate, basically.
The misconception that a lot of people tell me that don't understand the real estate world, they say, I never want to refinance. And I'm like, why? And they say it's because they think that when you refi, you're refining the whole amount over again.
No, yeah, you're just refining the amount that you owe.
Right.
Currently.
So that's saying that if you have a $400,000 loan and after 2 years, you paid off like 30 grand.
Yep.
And your loan is now 370. Now when you refi, you're refinancing that 370,000.
Yep.
Not 400.
Yeah. And on top of that, it also helps with if you only put 3% down, you're paying that private mortgage insurance, and for FHA, you're paying that FHA mortgage insurance. So when you refinance, that falls off, especially if you have 20% in equity. So
how do you find out if you have 20% in equity so it can fall off?
You would have to check, your home value of your home versus the loan amount you have.
So by checking the home value is like, if you did the refi and you got it appraised, that's
When you got appraised, yeah. But you get an idea when you look like a Zillow and stuff. You kind of see how much the increase is. It's not guaranteed. It's because you have to actually have an appraisal to actually have the real number, because sometimes it's off. But usually, you talk to one like me and my lender, and yourself too. We kind of know where the house price is at and go, it's a good time to refinance, to drop that. Usually, mortgage insurance can be $100 to like $500 a month additional. Yeah. So now you're right off the bat, right there, you're already saving like over $100, right? And then on top of that, when you're refinancing because the rate's lower, you're still saving another couple $100. So it's big savings for refinancing.
Do you know what he's talking about, Justin?
Yeah, I know what he's talking about.
Nice.
Yeah.
I like that. All right. So
I've done my research. No, I'm just kidding. I do have a question. If the value of your home goes down, can you refinance?
No.
You cannot. Why not?
Because you be owing, because now the house is worth less than the loan amount, so it'll be hard for us to refinance. That was the problem.
Okay.
Like in 2008, people can the rates shot up.
So yeah,
and then people can't refinance because the house is not worth the loan amount. So we're not gonna lend you money when the house is not worth that much.
So that's a two-part question, because he's saying no, you can't if the value of the home is less than what you owe.
Yeah.
Right.
But if the price dropped, but it's still more than what you owe, then you can.
Yeah, of course. Yeah, as long as you have equity, right?
As long as you have equity.
So what I'm saying is let's say in 2021 when the home prices went really high, and these people were already homeowners, yes, I'm like $200K richer, and then today it went down $100K, and for some reason they didn't refinance at that time, they weren't available, so now they want to refi for some reason,
It'll still be okay.
Then they can, because even though it dropped $100K,
you're still above. As long as the value of the home is not less than the loan amount you owe.
You think that's going to happen when the rates drop? The value of the homes are going to be low?
No. I think they're going to go up.
Yeah. The only time it happened was back in 2008 when it was the crash.
Yeah.
That's why there was a crash, because people couldn't refinance. Their house was basically, it's called underwater. So basically it's I owe $800,000. My house is only worth $600,000. We're not going to refinance that. You're stuck.
The difference between then and now is that what was your question that you asked again? You said, is it going to...
Can you refinance if the house value is less?
No, but I think I asked. No. You think that's gonna happen when the rates go down?
Oh, is the house value gonna go down? Oh, yeah. That's what you're saying.
Because like right now the rates are really high, and then that causes the prices of the homes to go down, right?
Correct. Mm-hmm. And then once the rates go down, the value is gonna go up because people are gonna start buying, and then they're gonna have a bidding war.
So I think when rates go down, it shouldn't affect house prices. It kind of
separate. They're two different things. Yeah. And the difference with 2008 is that people weren't able to buy homes,
and people. So that's why. And there's a lot of foreclosures, and that's why house prices dropped.
Yeah, that's why prices dropped, because when the banks started shutting down, and then more regulations were needed to get approved for loans, people couldn't get approved anymore, and that's why you can't buy a home. Then the prices go down. Yeah. But right now, if the rates drop, people are buying homes, and it's going to make the prices go up. Because people are like, oh my gosh, it's now back to 5%. I'm going to put $20K over asking and get it now. The other guy goes, well, I'm going to put $40K over asking and get in. And then there's
because when the housing crash, the rates didn't drop that fast. The lowest rates was during the pandemic. So it wasn't like that low before. So
I see. Okay.
Kind of two separate things.
Yeah.
So I have a question for you. When should everybody refinance? That's the question that everybody is wondering right now.
You can refinance anytime. Usually the lenders will say, you have to wait 6 months after your loan closes, then you can refinance. But you can refinance anytime, basically, as long as you're saving. I would recommend saving at least half a point.
How much is half a point?
So like, let's say your rate 7%, half percent.
I'm just kidding. All right, so in another episode we're talking about what does points mean, because I think lenders have their own vocabulary, and me and Justin are like, what does that mean?
Yeah, sorry. So basically it's 7% and the rate's down to 6.5. It's kind of worth it, because the half percent sometimes that makes a big difference. So it depends on the person. Some people are like, even if they save $40 a month, they're like, do it.
I have a friend who's an appraiser, and he refinances anytime he saves $20 to $40.
Yeah, they'll do it.
I'm like, what?
Crazy. Isn't there a cost to that?
Yes, there's a cost on refinancing.
The cost is usually about
$3,000.
Yeah, $3,000 on average.
But the thing is, people don't mind, because we can roll that into the loan. So it just adds to your loan amount. So technically, you're not paying anything out of pocket.
So here's another thing. If you buy a home through me and William, he will give you a free refinance within 5 years. Now, with you saying that it gets rolled into the loan, is that what happens? Is that why it's technically quote unquote free?
No, we don't charge anything. Yeah.
So right off the bat, guys, get a home from this guy and refinance for free in the next few years. For free $3,000.
Are you able to throw other debts into your refinance?
No, the refinance is only for your property. Once you start, and it's called cash out refi. So basically, if you want to use your equity to pay off like credit card debt, because a lot of people are doing that back when the rates were low. It's called a cash out refi. The rates are a little higher, but basically you can refinance over at least, I think, like 80%. As long as you don't meet over the loan to value, basically maximum. Some people pull out $100,000, $200,000 cash. Now you're, instead of you owe $400,000, you owe $600,000 in your loan. We'll give you $200,000 cash, basically, and you can use that to do whatever. When the rates were low, people were doing that to pay off credit card debt, because now you're only paying 4%, 5% instead of like 18%.
Yeah.
Right?
Can you explain the actual difference between a refinance and a cash out refinance?
So a refinance is just refining your home loan. That's it. No cash out. Like, we're just refinancing to drop the rate, drop your payment every month so that you save money. Cash out refi is people taking advantage of their property. That's why people buy houses, taking advantage of their asset, right? The equity they have. So basically, when you bought it was worth $500,000, your loan's $400,000, and now the house is worth $800,000. So basically, you have about 80%. Some goes to 90% loan to value. So you can pull about that $200,000 extra out to use for yourself. But
and is that a second loan?
No, it's so when it's a cash out refi, it's one loan. So basically, we put it into your loan, your own mortgage. So instead of only $400,000, now you own $600,000.
I see.
So it's not bad because the rates, cash out refi rates aren't better than home equity line of credit when we get into later, and other lending options because the rate's usually lower.
Oh, so a cash out refi and a refinance is not the same rate.
Not the same rate.
Oh, it's higher.
It's a little higher because we're giving you money back. It's a little bit higher, but it's still lower than a home equity line of credits, lower than personal loans, lower than credit cards.
I feel like most people would do a HELOC more than a cash out refi.
It depends.
Because now we're talking about a HELOC. People do like $200K off a high percent.
Yeah.
Compared to a cash out refi where it's a high amount, like 600,000 off a lower percent. Right. And we learned in our previous episodes when we talked about, is it better to buy a home when the home costs a lot with a low interest rate or to buy it with a price drop with a high interest rate? And we realized it's actually the one with the, I believe it's the one with the higher interest rate. No, the lower interest rate.
Lower interest rate. But it all depends on what you need them for in your scenario and what your financial goals are. So if you're planning to keep the house for a long time, then it might be worth it because in the long run you might save more money. But it all depends. Some people do the HELOCs because they're doing quick turnaround investments.
I see.
Yeah.
Okay. So So from what I said, I confused myself. But it's actually the cash out refi is better for you. It'll be cheaper.
It'll be cheaper depending on the goal. Depending on the goal.
But the HELOC, you can pay off any time. Yeah. That's the difference.
Yeah, and it's interest only payment.
Yeah.
So we'll go into HELOC in a little bit, and then we kind of like basically HELOC payments lower.
Yeah.
The payments are lower for HELOC because you're paying interest only.
So it's like,
so it depends on what you need it for.
If I let's say took out that money to buy a restaurant, and then my restaurant became so successful that I want to pay back that $200K on the HELOC, I can do that right away, and then my loan is closed.
Yep. Right? Or it stays open. The HELOC stays open, but you don't
I don't owe anything anymore, right? And then for the cash out refi, if I made that $200K, I can't pay it because it's actually $600K that I borrowed.
Yeah. Right? Basically. You can still put it back and lower it.
Oh, you can? So if I have a cash out refi, I can just always pay like
you can always pay additional principal. You can always pay additional principal to lower your principal, and then if you have, let's say you put $200,000 into your principal, we can do a recast. So recast is not like a refi, but we can just recalculate the amounts. The rate stays the same. Like we just recalculate the amount and then lower your payment that way.
So you have to do that in order to lower the payment, right? Because if you don't, and you put in that lump sum of like $200K
your balance basically just shaves off years of how much you say in 30 years. Now you just shaved off maybe 10 years. Yeah.
No, but you want to actually lower the monthly.
Yeah, you want to lower your monthly pay. So you make the payment. You go, hey, I want to do a recast. You call the lender and go, I want to do a recast because I paid $200,000 in principal, and now they'll recast it. Can
I do the same thing when I buy a car?
So I know car you can refinance. Car loans.
Oh yeah, I've done that before. Yeah. I bought a Tesla Model X, like a 2016, back in 2020, and I bought it at a used car dealership, just some mom and pop shop, and his rates were so high. But in order for me to take it off the lot, I had to go with his loan, right? And then the next day, I called Bank of America to refi.
Yep.
So I never made a payment to that guy. I instantly made it to Bank of America, which saved me like 3%, on an interest rate.
A lot of people do that. A lot of people buy the car, and then the payment's like $700. And maybe like 2-3 years down, and they paid off a good amount. They go, I want to refinance, and the refinance the rate and the loan amount because it's lower, and then the car payment now is like $500 instead of $700. So
I feel like with refinancing cars though, they throw the fees into that amount because I never had to pay extra to refinance a car.
Oh, I think it's because you're paying interest already. Yeah, I think it's just interest. I don't think there's no fee. Yeah, because
it's a big bank.
Yeah. It's still just interest. Business. Yeah, just want your business.
I see. So yeah, I was thinking like, after paying off my car for 2 years and I still have more payments, like, can I just drop $10K down to them? Does it do anything? No, like you said, it just shaves off years.
It just shaves off years, I think. And then I think with cars, you have to refinance. There's no recasting. For mortgages, we can, but not honestly for cars. When
you refinance a car also, like, so when you refinance a home, if I wanted to give you $100K, you can lower my payments that way too, right?
Yeah.
Okay, but you can't do that with a car.
No.
I can't tell the bank, hey, I want to give you 10 grand to pay.
I think you can give the bank 10 grand, and you still have to refinance. If that way you can, because here's 10 grand. I want to refinance, but put this 10 grand to lower my loan, and you can do that still.
Oh, I see.
So it'll lower the payment, but for like the recasting, like how you give me money without refinancing, we can just recalculate the balance without any.
I have a random question. If you refinance before like purchasing a home, does that hurt you?
Refinance what though?
Before your car or something? No. Oh, okay.
No, I do that all the time.
Yeah. Yeah. It's usually with the same bank. They don't pull credit usually.
Oh, really?
Yeah. Oh. I'd always recommend, my personal opinion, credit unions for car loans.
I have a credit union, and the easiest for me and the cheapest was always Bank of America.
Oh, wow. Okay. Yeah, so depending. Yeah. I know we have, because my wife used to be a teacher, so we have a Schools First, and their rates are low, and it's so easy. Like they'll pre-approve you, and like you're pre-approved for $50,000. That's sweet. And you just go, I want to use that pre-approval. I go, here's a blank check. Or like a $50,000. No, actually, you can go out there and look for a car $50,000. Yeah. Just how much the value is. They don't check my income. They do nothing. You're pre-approved.
Oh my gosh!
And then I found a car, and then I just go to the bank. They give me a check and give it.
That sounds so easy.
It's very easy. I was surprised coming because I used to work at a bank. Yeah. I'm like, are you sure? Like, they just literally gave me a check, walked to the dealership, and then I picked up the car.
I think that's tight. That credit union, because when I tried with mine is like a police force credit union, which should be helping everybody, right? You're talking about like LAPD or whatever it is, right? And you have to be family to have that, right? So when I did mine, it was so difficult that I just stopped. And also the rate was pretty much the same as Bank of America.
Yeah, the teachers one, they take care of the teachers. You don't have to be a teacher. As long as you have a family member that's a teacher or you work in the district. That's how I got it. Well, I got it because my wife, she used to be a teacher. And like that experience was like, wow. Like I was like, no credit union like that. But then once I got that, I've been buying my cars through credit union. It's so easy. Yeah. Like I have to worry about bringing my taxes, proving my income. But then this one's like, okay, you're pre-approved. Here's a check. Go buy your car.
So I guess it really depends on what the bank is, guys.
Yeah. It all depends on the company.
Every bank is different.
Everything's different.
But I hope we answered a lot of your refinance questions. Justin, did we answer your questions?
Yeah, for sure.
All right. Yep. So if you guys want a free refi, hit up William, but you have to buy a home through him. You have to
buy first and through him, and I
yes, I am the agent. So reach out to me. I'll send you to William and get pre-approved. Let's do it. And you can always reach out to Justin if you need any videography, photography needs. He's very good at what he does, but So everyone would love you to reach out to them, guys. I hope you guys enjoyed this video on the Next Win podcast. We'll see you on the next one. Peace out.
Bye.